Let me tell you something right off the bat. Trading looks easy from the outside. You see numbers go up and down. You think all I have to do is buy low and sell high. That's what everybody says. But if it was that simple, why do you think 90 out of 100 who try it end up losing? Why do most walk away broke, bitter, and telling everyone it's rigged? Ever ask yourself that? The reason is plain. Most people don't understand what this game really is. They think it's about being right. They think it's about making clever guesses. They think it's about catching the next big move before the other fellow does. But trading isn't about being right once or twice. It's about staying right long enough to still be in the game tomorrow. You can't stay in the game if you blow up your stake. And that's what most traders do. They blow themselves up by mishandling risk. Think about it. You've probably seen the fellow who brags about turning a small account into something big in a month. He tells you how he doubled it, tripled it. Sounds impressive, doesn't it? But let me ask you, how long do you think he kept it? Did he hold on to it for years? Or did he lose it back in one bad run? That's the part he doesn't tell you. And that's where the lesson is. I learned early that the market doesn't care how smart you are. The market doesn't care about your opinions. The market only cares about what you do when you're wrong. Because you will be wrong. That's a fact. Anybody who tells you they can predict it every time is a liar or a fool. The great operators, the ones who lasted, understood that the key wasn't avoiding losses. It was keeping them small. They cut them quick before the loss could ruin them. Now, ask yourself this: do you cut your losses quick? Or do you sit there hoping the market will turn around and bail you out? Be honest. Most traders do the latter. They hate to admit they're wrong. Pride gets in the way. They say, "It'll come back. I'll give it more room." That's the oldest mistake in the book, and it's the one mistake that wipes out more traders than all the others combined. It's easy to get carried away when you're winning too. That's another trap. A trader has a couple of good trades, and suddenly he thinks he's invincible. He increases his size, takes bigger risks, tells himself he can't miss. That's when the market usually humbles him. Did you ever notice how quickly confidence turns into overconfidence, and how overconfidence turns into disaster? That's human nature, and the market is ruthless in exploiting it. I'll give it to you plain. Most traders don't fail because they don't know what stock to buy or what chart to look at. They fail because they don't know how to handle themselves when money's on the line. They don't know how to manage risk, and without risk management, profits mean nothing. What good is making 1,000 today if you can lose 5,000 tomorrow? The trouble is, people don't like small profits either. They get a nice gain, but instead of taking it, they get greedy. They say, "I'll hold a little longer. I'll squeeze a bit more out of it." Next thing you know, the market reverses and the profit is gone. Then they're holding a loser, and instead of taking the small loss, they say, "I'll hold until it comes back." Now the loss grows. Tell me, does that sound familiar? Because I've seen it play out 1,000 times. You've got to learn to think of this business differently. Most of the crowd wants action. They want excitement. They want to feel like they're part of the chase. But action is poison in trading. The more trades you make just for the sake of trading, the more chances you give the market to bleed you dry. A professional waits. He waits for the right setup, the right condition, the right play. And when it comes, he strikes hard. But in between, he sits tight. How many of you can truly sit tight without feeling restless? It isn't natural. We're wired to always be doing something. The hardest thing in this game is doing nothing when nothing should be done. But most traders don't understand that. They want to make their money every day, as if the market owes them a wage. The market doesn't pay wages. It pays for right judgment. And right judgment doesn't show up on your clock. What's worse, when the average trader makes money, he treats it like found money. He takes foolish risks with it, as if the profits were house money. But tell me, isn't every dollar in your account yours? If you treat profits as less valuable than your original stake, won't you end up giving them back? That's what happens to most people. They never protect their profits. They only protect their pride, and pride has no value in the market. I'll say it again because it's the heart of it. The reason most traders fail is because they let their losses run and cut their profits short. They do the exact opposite of what they ought to do. Why? Because it's more comfortable. It feels good to hang on to a loser you can tell yourself you haven't lost yet. And it feels safe to grab a quick profit. You get the satisfaction of a win. But in the end, that comfort costs you your stake. So ask yourself, do you want comfort or do you want success? Because the market will never give you both. You know what else ruins traders? Overtrading. They get a little capital and they want to stretch it. They pile into too many positions, too much size, too much leverage. They forget that capital is their lifeblood. You run out of that and you're finished. Have you ever seen a fellow who survives a bad trade only because he didn't risk it all in one shot? That's discipline saving him. But most people, when they see a big opportunity, they think they have to bet everything. That's the gambler's way, not the trader's. And gamblers always go broke. I've said before, and I'll say again, this game isn't about making money fast. It's about not losing money fast. Once you learn how not to lose, the winning takes care of itself. But people don't want to hear that. They want shortcuts. They want sure things. They want to be told the next big stock. That's why tipsters and newsletters will never go out of business. There's always a crowd that wants easy answers. Do you fall for that too? If you're honest with yourself, you'll admit that trading is mostly a battle with your own emotions. The market is just the stage. Fear and greed are the players. When you get greedy, you hold too long. When you get fearful, you sell too soon. Controlling those two emotions is the hardest job in this business. That's why I always said the big money isn't in the buying or the selling, it's in the waiting. Waiting without fear, waiting without greed. How many traders can truly wait? Let me tell you another mistake most traders make. They trade too big for their capital. They don't size properly. If you have $10,000 and you risk half of it on one trade, what happens if you're wrong? You've crippled yourself. One wrong step and you're out. That isn't trading, that's suicide. A trader who lasts only risks a small part of his capital on each play. That way, a loss is just a scratch, not a mortal wound. But most people, they want to get rich quick. They don't realize that trying to get rich quick is the surest way to get poor fast. You see, the whole thing comes down to discipline. Do you have the discipline to take a small loss? Do you have the discipline to let a profit grow? Do you have the discipline to sit out when there's no play? Most people don't. They act on impulse. They chase tips. They follow the crowd. And the crowd always loses in the end. Always. Ever notice how the market loves to fool the greatest number of people most of the time? That's not an accident. The crowd buys at the top because they can't stand to miss out. The crowd sells at the bottom because they can't stand the pain. A trader who goes with the crowd will end up like the crowd, and the crowd's record is written in broken accounts. Let me put it to you simply. Trading success isn't about knowing everything. It's about avoiding the mistakes that everyone else makes. It's about cutting your losses before they grow. It's about letting your winners run long enough to pay for the losers. It's about protecting your capital as if your life depends on it, because in this business, it does. Without capital, you don't get a second chance. So the next time you sit down to make a trade, stop and ask yourself, what am I really risking here? Am I risking a small part I can afford to lose? Or am I putting my whole stake on the line? Am I trading because the setup is right, or because I'm restless and want action? Am I letting greed or fear make the decision? Those questions matter more than any chart or indicator. The truth is, most traders fail because they don't ask those questions. They dive in blind, chasing profits without respecting risk. They don't keep records. They don't study their mistakes. They don't learn from experience. They repeat the same errors until the market cleans them out. Tell me, do you want to be one of them? I've seen fortunes made and lost in the market. I've made them myself and lost them too. And every time, the reason for the loss came down to breaking the simple rules. Not cutting quick enough, trading too big, ignoring the signals, letting emotions take charge. It wasn't the market that beat me, it was me. That's the real enemy, not the tape, not the crowd, not the operator on the other side. Yourself. That's why 90% fail. Not because the game can't be won, but because they can't master themselves. They can't stick to discipline when the heat is on. They can't swallow their pride and take a small loss. They can't sit tight when nothing should be done. They can't ride a winner because they're too scared it'll slip away. And so they lose. They lose again and again until they're out of the game entirely. Most traders don't realize it, but the very thing they think they're protecting in this business is usually the very thing that destroys them. They're not protecting their money. They're protecting their pride. And pride, let me tell you, has no place in the market. The market doesn't reward pride. It punishes it, every time. When you sit in front of that tape, the numbers flashing, your finger hovering over the buy or sell, what are you really thinking about? Most people, if they're honest, they're thinking, I don't want to be wrong. They're thinking about being right more than they're thinking about keeping their stake safe. And when they get into a trade and it starts going against them, they don't cut it. Why? Because cutting it means admitting they were wrong. And for most people, that hurts worse than losing money. Do you see the insanity in that? A man will cling to a sinking trade just to avoid saying, I made a mistake. He'll let the loss get bigger and bigger, telling himself the stock will bounce back, the market will turn. He'll be vindicated in the end. But every tick lower is more money bleeding out of his account, and he sits there letting it happen because his pride won't let him take the small hit. He would rather hope than act. Do you ever catch yourself doing that? Now, money in the market is like your blood. You run out, you're finished. You don't get to trade another day if your account is drained. But pride doesn't buy you anything. It won't cover a margin call. It won't pay your broker. It won't keep you in the game. Yet 9 out of 10 traders treat their pride like gold and their capital like loose change. They'll spend down the one thing that keeps them alive just to protect the one thing that doesn't matter. Doesn't that sound backwards? I've seen men who would never let a small loss touch them. They cut it quick, like a doctor cutting out a rotten spot before it spreads. And those men lasted. Maybe they took a dozen small cuts, but they were always around for the big move that paid for all of them. The fellows who clung to every losing trade, hoping it would turn, those fellows didn't last. The market cleaned them out. The market doesn't tolerate weakness. It doesn't care about your ego. It only cares about discipline. Ask yourself, do you want to be right? Or do you want to make money? Because you can't always have both. Sometimes being wrong and admitting it right away is the only thing that saves you. Sometimes the best trade is the one where you take your loss quick and move on. But how many traders do you know who can swallow their pride that fast? Most of them will take the small profit right away just to brag about being right, and then they'll sit on the loss because to admit it means shame. That's why their accounts shrink month after month. I remember once I had a trade that turned against me right after I got in. My plan said to cut it at a certain point, and it hit that point almost immediately. Now, I could have told myself it'll come back. I could have rationalized it, but I cut it. Took the loss, moved on. 2 days later that stock dropped another 10 points. That small cut saved me from a serious wound. But here's the thing, at the time, the small loss didn't feel good. It stung. It always does. But I had to choose between protecting my pride or protecting my capital. Which do you think mattered more in the long run? And here's another side to it. When you protect your pride, you create a vicious cycle. You don't want to admit you were wrong, so you hold the loser. While you're holding, your capital is tied up. You can't put it into a new trade. You can't seize an opportunity that's actually working. You're stuck, locked up by your own stubbornness. How many chances pass you by while you sit there babysitting a mistake? The cost isn't just the loss you're holding, it's all the gains you miss because you refuse to admit you were wrong. Most people don't measure that. They look at the trade they're stuck in and say, I haven't lost until I sell. That's another lie pride tells you. You have lost. The money's gone from your account, whether you book it or not. Pretending otherwise doesn't change the fact. But pride loves to whisper in your ear, don't take the loss, you'll look foolish. Don't admit it, it'll turn. And traders listen over and over until there's nothing left to listen with. Think of it this way: a trader who protects his capital first, above all, survives. He treats every dollar like ammunition. He knows that without it, he can't fight tomorrow. So he never wasted protecting his ego. He knows the ego can take a bruise, but the account can't afford a blowout. That's the kind of thinking that keeps a man in the game for decades. The other kind, where you'd rather be right than rich, that's the thinking that wipes you out. Let me put a question to you. If you're in a losing trade right now, what's really stopping you from cutting it? Is it the money, or is it the feeling of being wrong? Be honest, because most of the time, the money you'd lose is far less than the pain your pride tells you you'll feel. But you let that fear of being wrong chain you to the position, and in the end, both the pride and the money are gone. The crowd never sees it that way. They say, I can't sell now, I'll lose. As if not selling means they haven't lost already. They confuse realization with reality. And the market loves to teach them the difference the hard way. Pride keeps them from cutting small losses, and small losses always have a way of becoming big ones. By the time they finally throw in the towel, it's too late. The account is crippled. One more round like that, and they're finished for good. That's the lesson 90% never learn. They defend their pride instead of defending their stake. They think they're saving face, but really they're digging their own grave. They put all their energy into being right, when the only thing that matters is staying solvent, and the market doesn't wait for them to wise up. It keeps grinding, keeps moving, indifferent to their feelings. By the time they understand, if they ever do, they're already out of the game. So remember, this: capital is your lifeline, pride is your anchor. One keeps you afloat, the other drags you down. The choice is yours, every single time you place a trade. Which one do you guard? Which one do you sacrifice? The answer to that question separates the survivors from the failures, the 10% from the 90%. The hardest part of trading is not pulling the trigger, it's keeping your hands off the trigger when nothing should be done. Most people can't stand waiting. They want action. They want movement. They want the feeling that they're doing something. They think if they're not trading, they're missing out. But in reality, the waiting is where the money is made. Doing nothing is often the most profitable move a trader can make, and it's the one move most traders never learn. Think about it. The market doesn't give you clean, perfect opportunities every day. Some days it's choppy. Some days it's uncertain. Some days it's just noise. But most traders don't want to accept that. They think the market should hand them a paycheck every morning, like an employer. So they force trades where no trades exist. They jump in just to feel busy. Do you know what happens when you force a trade? You're giving the market another chance to take a bite out of you. Waiting is uncomfortable. That's why most avoid it. When you're waiting, your mind plays tricks on you. You start to doubt yourself. You think, maybe I'm being too cautious. Maybe I'm missing a move. Maybe everyone else is in and I'm the only fool sitting out. Ever felt that itch? That fear of missing out is the death of discipline. It drives traders into mediocre setups, half-baked ideas, and rushed decisions. And those decisions almost always cost money. I've sat in front of the tape for hours, days even, without making a single move. It wasn't easy. The market would tempt me, showing little feints and flutters, giving the appearance of action. But I knew better. The big moves, the real money, making opportunities, they don't come every minute. They come when the market aligns, when the conditions are right. You have to wait for your pitch. Like a batter at the plate, you don't swing at everything. You swing at the fat one down the middle. But tell me, How many traders do you know who can really sit there and let pitch after pitch go by without taking a swing? The truth is, most traders can't stand the boredom of waiting. They equate trading with excitement. They want the rush. They think if they're not trading, they're wasting time. But in this business, patience is a weapon. The man who waits has the advantage. He conserves his capital, his energy, his focus, and then strikes when the odds are in his favor. The man who can't wait spends all his bullets shooting at shadows, so when the real target shows up, he's already empty. Ask yourself this: how many times have you taken a trade just because you were restless? Not because the setup was perfect, not because the conditions screamed for action, but because you were tired of sitting still. And how many of those trades turned into losses, or worse, distractions that pulled you away from seeing the real move developing elsewhere? If you add them up, you'll see most of your biggest losses come from impatience, not from lack of knowledge. I've said before, the big money is in the waiting. That doesn't mean waiting once you're in the trade, though that's part of it too. It means waiting before the trade, waiting for the market to line up in such a way that the odds favor you. When you jump in too early, you expose yourself to all the chop, all the noise, all the false starts. You take the risk without the reward. But if you wait, really wait, until the signs are undeniable, the move practically carries you along. Isn't that what you want? To be carried by the market instead of fighting it. Most traders confuse activity with progress. They think the more they trade, the closer they are to success. But the market doesn't pay you for effort. It pays you for judgment. One well-placed trade can make more money than 50 random ones. But because traders can't wait, they fritter away their stake on dozens of small losses. By the time the right opportunity arrives, they're either too broke to take it or too demoralized to recognize it. Waiting isn't just patience, it's preservation. I'll tell you something from experience. Some of my biggest wins came after long periods of sitting still. I'd watch the tape. I'd study the action. I'd note the conditions. For weeks, sometimes months, I'd do nothing but observe. People thought I was idle, wasting time. But when the move came, when everything aligned, I was ready. I had the capital, I had the focus, and I had the conviction. And that one move made more than all the little trades I could have forced during the waiting. Isn't it better to catch one clean wave than to splash around chasing ripples? But waiting takes strength. It takes discipline. It goes against human nature. We're wired to act, to do, to chase. We hate sitting still. That's why casinos make so much money. People can't sit there watching. They have to bet, even when the odds are against them. The market works the same way. It tempts you with constant motion, constant flickers of opportunity. But if you bite every time, you're feeding it your capital piece by piece. The traders who last are the ones who know when not to play. Let me ask you straight, are you comfortable doing nothing? Can you watch the market dance around without feeling the need to jump in? Because if you can't, you'll always be at the mercy of your own impatience. The market doesn't punish you for not trading, but it punishes you severely for trading when you shouldn't. And yet, most traders only feel alive when they're in a position. They can't stand being flat. They think being flat means they're missing out. But being flat at the wrong time is a position to the best one you can have. I've seen traders blow up, not because they didn't know how to trade, but because they didn't know how to wait. They could read the tape. They could pick good stocks, but they couldn't sit on their hands when the time wasn't right. They kept nibbling, losing a little here, a little there, until they had nothing left. By the time the real play came, they were spectators, not participants. That's the cost of impatience. The irony is, the waiting often feels like the hardest work. You're sitting there, doing nothing, but inside you're fighting the urge to act. You're fighting boredom, fear of missing out, anxiety. You're fighting yourself. That's why waiting is the mark of a professional. Anybody can jump into a trade. Anybody can hit the button. But it takes a rare kind of discipline to sit tight, to watch the tape roll by and not touch it, knowing that not acting is the smartest move. So the next time you feel that itch, that urge to trade just to trade, stop and ask yourself, is the market really giving me a fat pitch, or am I just restless? Am I trading because the opportunity is there, or because I can't stand waiting? If it's the latter, you already know the outcome. The market will take your money, thank you very much, and move on. The winners are the ones who don't give in to that urge. They wait, as long as it takes, for the right setup. And here's the cruel twist: when the real move comes, it often looks too obvious. After all the waiting, the crowd says, "It's already gone, I've missed it." But the professional, the one who waited, recognizes that this is the very moment he's been sitting out for. He doesn't hesitate. He steps in with confidence, because he knows he's not forcing it. That's the payoff for patience. One good trade, clean and decisive, instead of a dozen messy ones. The hardest part of this game isn't figuring out what to buy or sell. It's figuring out when to do nothing. Most traders never learn that. They chase every flicker, every false start, until the market drains them dry. They fail not because they can't pick winners, but because they can't wait for them. Waiting is the art. Waiting is the discipline. Waiting is the profit. The market rewards the patient and punishes the restless. Always has and always will. Overtrading is the silent killer of most accounts. It doesn't look dangerous at first. It feels like you're just keeping busy, staying active, doing what a trader is supposed to do. But slowly, without you realizing it, it bleeds you dry. Trade by trade, commission by commission, tick by tick, your capital slips away. You don't notice it because it doesn't always come with a big dramatic loss. It comes with 100 little scratches, each one harmless on its own, but together they cut you down. Most traders don't blow up because of one bad trade. They blow up because they take too many trades. They can't sit still. They think the more trades they make, the more money they'll earn. But the market doesn't pay you for effort. It doesn't hand out wages for activity. It pays for judgment, for patience, for timing. You could make 50 trades in a week and still end up behind, while one well-placed trade in the same week could have given you all the profit you needed. So why do most keep swinging at every pitch that comes their way? Because they can't stand the boredom. That's the truth. Sitting flat feels like failure to them. They need to feel engaged. They need the rush of having a position on. The waiting gnaws at them until they break. And once they break, they start forcing trades. They convince themselves that this setup is good enough, that this little move will pay. They lower their standards, telling themselves action is better than inaction. But have you ever noticed how lowering your standards in the market always costs you? Overtrading is also rooted in fear. Fear of missing out, fear of being left behind. The market moves and the impatient trader thinks, I've got to be in. If I don't trade now, I'll miss it. So he jumps in too early, before the move has proved itself. Or worse, he chases after a move that's already gone, buying tops and selling bottoms just to feel like he's part of the action. How many times have you done that? Jumped in late, only to watch the market reverse the second you got on board. That's overtrading, pure and simple. There's another angle too. Some traders think trading is about working hard. They treat it like a job where effort equals reward. They sit at the screen all day, clicking away, because they believe if they're not constantly doing something, they're not being productive. But the market doesn't care how many hours you put in. It doesn't care how many trades you place. It only cares if you're on the right side at the right time. Overtrading gives you the illusion of progress, but it's really just digging a deeper hole. Commissions, spreads, slippage, those are the hidden taxes of overtrading. They seem small on a single trade, but stack them up over dozens or hundreds, and they eat a huge chunk of your profits. You may think you're making headway, but by the time you subtract the costs, you're worse off. The broker loves an overtrader. The market makers love an overtrader. They live off the churn. But for you, it's poison. You're feeding everyone else while starving yourself. I've seen traders ruin themselves this way, not by losing on a big gamble, but by death from 1,000 cuts. They win some, they lose some, but because they trade so much, The edge they thought they had gets swallowed by costs. They never give themselves the chance to let a good trade work because they're already looking for the next one. They don't give their capital time to breathe. It's always tied up, always in motion, never resting, and a stake that never rests wears out faster. Ask yourself this: do you really need to trade every day? Do you really need to have a position at all times? Or do you just feel uneasy without one? Because if it's the latter, you're not trading for profit, you're trading for comfort. You're using the market to soothe your nerves, to feel like you're in the game, and comfort in the market is expensive. It costs you discipline, it costs you judgment, and eventually, it costs you your capital. I can tell you from experience, the biggest wins never came from overtrading. They came from waiting for the big play and hitting it with size. You can't do that if your account is already drained from 100 small trades. You can't go big when you've spent all your bullets, shooting at targets that didn't matter. Overtrading robs you of your firepower. It leaves you weak when you should be strong. Isn't that the cruelest part? That by keeping busy, you destroy your chance of really winning. The crowd never sees it that way. They think more trades mean more opportunities. They brag about the number of trades they made, as if quantity meant skill, but the record shows otherwise.